Good afternoon to all the participants and to our panelists. Welcome. We look forward to have this discussion on the cryptocurrency market and the factors that are currently influencing the demand and supply for cryptocurrencies. We are joined by a panel of experts from MyWealth Investments, as well as Luna, one of the local exchanges in South Africa. I am Annetjie van Rooyen. I am the CEO and key individual of MyWealth Investments. MyWealth Investments is a subsidiary of Regenesis Business School. The company is an authorized financial services provider. And please note that this session or discussion is for information purposes only, and we do not intend to provide you with investment advice while we have this discussion. So I would like the panelists to introduce themselves to the audience. I'm going to kick off with Neelan from MyWealth Investments and ask him to tell us a little bit more about himself. Neelan, thank you very much for making the time to join us today. Please tell us a little bit more about your background.
My name is Neelan Gangadu. I'm a stockbroker at MyWealth Investments. I have a BCom degree with majors in accounting and economics, and I have more than 20 years experience in the stockbroking industry. Thank you.
Thank you, Neelan. We look forward to hear what you are going to share with us. Then we also have Rulien van den Heever from MyWealth Investments. Rulien, if you can just quickly give us a little bit more about your background, and thank you for making time to join us today.
Good afternoon, Annetjie and everyone. Thank you. My name is Rulien van den Heever. I'm the Finance Director of MyWealth Investments. I'm a chartered accountant and a registered auditor with more than 25 years experience in public practice. I'm looking forward to be here today. Thank you.
Thank you, Rulien. Welcome. We look forward to hear what you are going to share with us. Then let's move over to the experts from Luna. Christo, let's start with you. Tell us more about yourself. And welcome, and thank you for making time to join us today.
Thanks, Annetjie. It's great to be here. My name is Christo de Wit. I'm the country manager for Luna South Africa. Prior to joining Luna in July of last year, I spent the last 6 years in Southeast Asia working across multiple businesses in both the tech and fintech industries. And I'm very excited to be here. Thank you.
Thank you. We look forward to hearing what you're going to share with us. Taris, let's move over to you. Taris Arnold from Luna. Welcome.
Thank you. Hi, everyone. I'm Taris Arnold. I'm the business development lead for Luna. I've been at Luna since 2021. I have been working in the cryptocurrency space since about 2018 and worked in a couple of startups in the venture capital space since then, and really excited to be here.
Thank you, Taris. We look forward to hearing your contribution. Then we move to James Clayton from Luna. James, please tell us more about yourself, and also a very warm welcome and thank you for joining us today.
Yeah, thanks, Annetjie, and good afternoon, everyone. Great to be here. I'm James. I'm the Digital Asset Operations Manager in Luna's Treasury with a responsibility for credit, liquidity, market risk. I also act as a subject matter expert across to the product teams in Luna regarding TradFi. I've spent about 25 years in banking, trading and treasury, asset management, bond and liability-driven investment portfolios, and about another 10 years in consultancy as well. Yeah, great to be here.
Thank you so much. Right, so let's kick off then, and I'm going to open the discussion now. We'll start with you, Taris. So if you can perhaps just tell us what is currently happening in the crypto market. The cryptos, a lot of investors have referred to cryptocurrencies as being in a winter period over the past year, but there has been some action in the first quarter of this year. So just give us a general overview of what you have noticed, and also tell us what you have witnessed in terms of the behavior of investors in the cryptocurrency space from Luna's point of view, please.
Thanks, Annetjie. So I think to address that first question, just a high-level summary of what's happened over, I'd say probably the last 12 to 18 months is really relevant to where we are at the moment. As you said, we're in a period that the crypto industry refers to as crypto winter, which is essentially a increased pressure on the price and decreased market cap. It is part of the cycle that general markets experience, but it's definitely been exacerbated by some of the challenges the crypto industry faced last year. For reference, in November in 2021, we had hit a record high with the Bitcoin price used kind of as an indicator of the wider crypto industry, topping out at over R1 million. Throughout last year, we saw a number of cryptocurrency companies that hold kind of significant market shares start to collapse and really drive the price down and impact investor sentiment, really coming out with FTX, one of the largest crypto exchanges in the world, infamously collapsing in November 2022 and seeing the price drop down to about 280K. We have since then, in 2023, see the price slowly start to regain and climb back up. Currently, for the last few months, the last few weeks, we've been sitting around 500 to 600K in rands. I think a large part of that has been driven by some of the topics that I know my other panelists will be addressing, but things like changes in regulation globally, but also the banking crisis, and also most recently being impacted by the debt crisis that America was facing, and has only kind of recently just averted by increasing the debt ceiling. So it has been a very difficult time for the crypto industry, but while the price has been down and volumes have been down, we have seen a lot of activity that's been quite interesting. We've seen shifts in attitude and sentiment from governments who a couple of years ago were looking to ban cryptocurrencies to now creating regulatory frameworks that should enable safer investment by retail and corporate investors, but also allow cryptocurrencies to build a lot more securely. And even to that point, we've seen an increase in central banks starting to explore, research, and even pilot their own form of cryptocurrency called central bank digital currencies. And then on the more private sector side, we've seen companies like Starbucks, Nike, and Reddit also get deeper into the crypto space. Starbucks recently launched an NFT collection that sold out in 20 minutes and is currently sitting at about 400% gains. And that was launched in March this year. So it has been really eventful this last period, but it's starting to feel a bit stabilized. How that's reflected on the investor size and the behavior we've seen. Well, last year we did see, as anticipated, when you start seeing a lot of these kind of scandals and negative incidents happening in the space, we saw a lot of investors looking to protect their funds by cashing out of their positions, moving their funds into more traditional spaces. We've seen that then compound with driving the price down and a lot lower trading volumes, which obviously also then relates to liquidity. We did see an increase in investors also moving to self-custody as they were concerned about the safety of their funds. Things that cryptocurrency companies usually try and do, something we helped pioneer, was proof of reserves that shows how secure people's funds are, but there was still a sentiment and need to protect their funds. Something we've started to see this year is a lot of those funds returning to the platforms. Confidence in cryptocurrencies and Luno and various players has increased, but we're still seeing a relatively conservative approach to investment. The mainstream kind of investment sentiment we saw in 2021 is still missing. I think a lot of investors are waiting to kind of see that market turn. Some people believe that the crypto winter is coming to an end, and I won't make any speculations on that. But as we start seeing regulations come in, we do hope that will build people's confidence and feel comfortable investing again.
Thank you, Taras. Very interesting points you make there. So would you say then, with the reputational damage that's been caused in the crypto market by a company like FTX during the course of last year, did investors liquidate positions, or did most investors move to self-storage? Is it possible to answer that question?
Yeah, so I think there's, looking at the different type of investor profiles, there are kind of more traditional kind of intermediate or beginner crypto investors that don't possess the confidence or maybe the ability to do self-custody. It is something that isn't really experienced in the traditional investment world. So a lot of people coming into crypto for the first time in 2021 and 2022 weren't familiar with that concept. So a lot of those types of investors, we did see liquidate their positions, move their fiat funds into more conservative or more familiar investment opportunities. On the flip side, you do have more advanced investors who already were either self-custodying the majority or some portion of their funds that did feel confident and move their funds off balance.
Okay. And Darius, tell us the investors, the age group of these investors. Is it younger people that invest in cryptocurrency, or is it across the board?
So there definitely is a bit of a lean younger, but I would say that it really is across the board. We have numerous investors that cross all kinds of age brackets, education levels, financial income. We do believe that we can provide a secure investment opportunity for various types of individuals. We allow people to invest in as little as 10,000 Rand. So we do see quite a broad spectrum of investors from a retail perspective, it's individuals, but we're also seeing a really interesting broad perspective of more business type corporate investors, from it's kind of your tech startup-y founder that you would normally picture to more traditional conservative South African consumer investors.
Okay, great, thank you. And then tell me, Darius, the investors, do they invest short term, or do they invest and hold on for dear life and become hodlers because they want to become what Krista is going to discuss later? They want to become beneficiaries of another crypto pizza day sometime in the future. So do you have traders or investors mostly on your platform?
So again, we do have a bit of both. The majority of our investors, we are looking at kind of individual consumer investors. The majority of those investors are making investments to hold for long term, usually averaging about 8 months. Obviously, with market shifts, those can change, but that is where we're seeing a lot of our kind of average investors are putting in a few hundred Rand every month, maybe, and just sitting, waiting, hoping to get to that Bitcoin pizza day moment. But we do cater and support a number of more advanced investors that are either doing kind of high frequency trading or trying to take advantage of arbitrage opportunities. So we do have a number of individual investors that act in that manner, and corporate investors as well.
And then when the crypto market moves out of that winter season, do you experience a huge increase in the size of your transactions, or is it just more investors coming on board that's driving the demand for those currencies? What is the typical scenario that plays out when the currency prices start recovering?
So when we do start to see those kind of significant growths over an extended period of time, and that brings back that confidence, we do see individuals increasing their transaction volumes, their transaction sizes. I think a large part of that is also just dependent on their overall economy. That just because crypto prices are going up doesn't necessarily mean people to have an increased amount of disposable income to invest in crypto, but it does mean that they may start moving some of their funds held in more traditional investments over to crypto and increasing their exposure to the crypto side. But we do see usually a pretty significant increase in just individual investors coming in. A lot of people doing it for the first time, or individuals that may have bought previously, either hold or liquidated the funds and now looking to get back in.
Yeah, that makes sense. And I think a lot of people also, when there's movement in the crypto market, they know that there can be vicious moves. So they jump in and try and generate additional income and trade that market a little bit, because you can throw a dart to make money on any coin when those coins start running. Just your last question. You really look very young. I told you earlier offline. But if you could be a younger Darius, what would you tell yourself if you go back to 2008, say 2009? What would you tell yourself to do?
from my own personal experience and perspective, I definitely would encourage myself to be a little bit more open and comfortable with taking some risk and volatility. I do think back to my first job where I did have a boss before the first kind of big crypto bull run, who was trying very hard to convince me to put a lot more of my funds into Bitcoin, as he had done. And I do definitely feel like I missed that boat. I think would have seen about 400% increase in my investment there. So I would have definitely encouraged myself to be a little bit more risky, but also to back that up with doing a lot more research, and definitely not making any moves on just the market sentiment or hype. Yeah, so definitely do research, but be comfortable with a bit of risk.
Thank you, Terence. I'm in exactly the same, but it took me a long time to do my research and to trust the cryptocurrency market before I entered it myself. So thank you very much for that valuable input. So Neelan, let's move on to you and tell the participants a little bit more about the economic backdrop and what has been playing out and what might have forced the cryptos to wake up and come out of that winter period, because there has been a lot of action in the equity markets globally, but one specific event during the first quarter of this year. Can you perhaps tell us a little bit about that and tell us whether you feel that there's a correlation between that event and what actually happened to the prices of the cryptocurrency market? Over to you. Thank you.
Okay, thank you, Aniki, for that. Look, obviously, the recent banking crisis in the US have been making headlines on a daily basis. And obviously, I in fact saw that this did have an impact on the crypto market. Silicon Valley Bank was bought by First Citizens Bank. And then the three main ones was First Republic Bank, that was sold to JP Morgan. Signature and Silvergate Bank subsequently failed, collapsed. And now, since these two banks were crypto-friendly banks, most of their funds flow direct into the crypto market. And obviously, while all this was going on, this sort of also spilled a little bit over to Europe, where we saw Credit Suisse were taken over by UBS Bank. So also, we must also know that, Bitcoin was created just after the 2008 financial crisis, when people started showing distrust in the banking system. So since the collapse of Silicon Valley Bank, we saw the price of Bitcoin rise from about $20,000 to about $30,000, but has since then pulled back to where it's sort of forming a base at about $27,000. But this is still far from the peak it reached in 2021, November 2021. It was almost $70,000. And for now, it seems the banking crisis is under control, with the Fed adding liquidity to these banks.
Yeah, you're 100% right. It's been well contained, but I've added about 6 of those regional banks to my watch list, and I see quite a bit of volatility in those prices when they trade in the US at night. So I think it stays in the back of the mind of investors that there is a possibility that one of these banks can run into trouble again. And I personally think that that is what's holding the crypto prices at this level. I think that's why they're consolidating here, because I don't think we are 100% out of the woods just yet, because the jobs market in the US remains very strong. So that opens up the door for another possible interest rate hike. Everybody was hoping that we'll pause in June. Maybe we don't pause, we just skip. It seems like traders are already factoring in another interest rate hike. So you can't rule out that any of these other regional banks won't run into trouble. And then once again, it will, I think, push demand for cryptocurrencies. Maybe just your last thoughts on the current negotiations regarding the debt ceiling and how that affects general sentiment, risk on, risk off trade, and if you think there's a correlation between that risk of sentiment and then risk on and risk off in the crypto market.
Yes, I think with regard to the debt ceiling, I'm sure everybody's crossing fingers that it get passed by the House and the Senate later today, tomorrow as well. So that does sort of play and add more risk into the market at this moment. And that's what we've seen playing out at this stage. So against this backdrop, one must ask yourself whether the further increases in interest rates and the stress in the banking sector will tip the US into a recession or not. So for now, we see that we assume that the US will tip into a recession, and that will have dire consequences for the global economy. So that's why I would say for now, sentiment in the market is risk off.
You can clearly see the risk aversion, especially when it comes to South Africa right now, where our government is getting up to certain shenanigans. But once again, those actions can increase demand for cryptocurrencies.
Correct.
Right, thank you, Neelan. Thanks for your input.
Sure, thank you so much.
Thank you. Right, then let's move on to James. James, can you tell us why you think investors should invest in cryptocurrencies, despite the fact that it is an extremely volatile asset class? Personally, I've been involved in that market for quite a few years, and it's nothing out of the ordinary for those prices to go down 80% in a year. Once they bottom, you get very handsome returns if you are able to hold on. But you have to accept the risk and know what you're in for, and it is a volatile asset class. So why then would you say people still get involved? That's my one question. And then the other question is, what have you guys at Luno done? What have you introduced? What have you developed in terms of new how do you go about that process? Thank you.
Thank you very much. That's a tricky question. Why should you invest in crypto? So I think I'm going to address it from the investment perspective, from the longer term perspective, rather than kind of looking at the market as to when you can portfolio, which I think a lot of the audience will be thinking in those terms. So having crypto in a diverse investment portfolio, it can be good for a couple of reasons. And one is the concept of ingress in asset classes. So I think some cryptocurrency protocols and ecosystems are, in the long term, expected to create value by becoming part of a combined kind of or emerging Web3 and TradFi economy. So some of them are going to be part of that, and some of them are going to create incredible value. But that's the perspective on it. But we can't be sure which ones will do that. And so if we choose one to invest in, I mean, there's a risk that one will be one of the ones that doesn't make it. So an approach is to invest in a mix of cryptocurrencies that we feel or have the opportunity to be part of that emerging economy. And so an indicator of that could be those cryptocurrencies which are currently have the most value in them, and that's on a market capitalization basis. So what the market's saying by looking at the prices and the supply of coins out there is that these currencies, cryptocurrencies that have the highest market capitalization, are the ones that the market expects to perform in the longer term. So that's the one argument which talks about sort of relative performance over the long term. And the other argument of why it's good to have cryptocurrency in a diversified portfolio is uncorrelated performance. So, and again, I'd imagine this is the right audience to talk to about modern portfolio theory. It says that you're going to get the best risk-weighted or risk-adjusted returns if you invest in a mix of uncorrelated assets. And so cryptocurrency generally does give you it's not very uncorrelated, an uncorrelated return when looked at in terms of referencing other asset classes. So the opportunity there is to put some of your portfolio into cryptocurrencies. And I'm not saying that you should put a majority of your portfolio in there, but a small amount invested into an uncorrelated asset is a good way in modern portfolio theory terms of making a better risk-weighted return. So what are we doing at Luno? We've got a very cool product we've just introduced, just released into the South African market. That's our bundles product. And we've released something called the Luno Large Cap Bundle. And what that allows us to do, or allows a Luno customer to do, is to purchase a mix of the largest cryptocurrencies and weighted by market capitalization. And for that mix of coins to be automatically rebalanced for you against a market cap index. So the major features of this product are that you get that diversified sort of coin holding, and it's diversified by market capitalization, which is matching that market value. And the bundles product performance, it aims to track the DLCS index, and the DLCS index is a CoinDesk index. It's the Digital Large Cap Select Index, and the product aims to track that index, but in rand terms. CoinDesk produced this index according to their index methodology, and it does things like it excludes stable coins, because stable coins, they're stable by nature. And also, if you want to invest in crypto, you don't want to invest in stable coins, because stable coins kind of mimic TradFi returns. And it excludes meme coins. That's very important for us, that it doesn't include meme coins, because you're just getting potential hype without any intrinsic value. And then the other thing that the CoinDesk index does is it limits the churn that would come by tracking, so kind of automatically tracking every single coin that comes in and out of on a market capitalization basis. It ensures that coins have that market capitalization or that market volume of daily trade over a longer period of time before it gets included in the index. So overall, it's the opportunity to invest diversified into an asset that can improve your risk-adjusted returns.
Thank you, James. Yeah, and then obviously, I mean, with Bitcoin being your market leader and the other coins acting or representing the altcoin group, you sometimes find that they move in different directions. So you're obviously building like a natural kind of hedge in that basket. So I agree with you 100%, and I don't think there's anything wrong with diversifying your investment portfolio to allocate a small percentage to these kind of investments. So I would also just like to ask you then, in terms of the coins that you have listed on your platform at Luno, what is the selection process that these coins go through? Is there rigorous risk management involved? Are there committees involved to make these decisions? How does Luno decide which new coins to add to the platform?
Yeah, so we've got a rigorous platform or coin selection process in place. We've got a formal digital asset selection process and a committee with specific assessment criteria, which are broadly based on one, is it a meme coin? We definitely don't want those on the platform. Again, meme coins, hype, no substance. Secondly, we say, well, do our customers want the coin? And so we do market research to ensure that our customer base actually likes that coin and wants to invest into it. Then the third criteria is, can we support it? You know, currently, do we have the infrastructure which can support that on a risk basis? And then also, is the coin aligned with our long-term strategic vision of product that we want to offer to our clients? So we're very careful about what we do, and we make sure that it's aligned with Luno's long-term strategic vision. That's broadly our approach to new coins.
And how do clients go, or investors go about it if they want to invest in these bundles? How do you have a minimum investment value? How easy is it to get access to these baskets?
It's super easy. It's if you're an existing Luno client, it's just pretty much a click of 2 or 3 clicks of a button, and you're away. If your wallet, your Rand wallet is funded. If you want to, if you're not a Luno customer, then become one and try it out. What's the kind of timeline there, guys, for becoming a customer? How fast can you do that if you go onto our platform for the first time?
James, within minutes, depending on how far you want to go down the KYC route, right? But it's have your documentation ready, sign up, proof of identification, all of that ready, and A for away.
Yeah, A for away, bank transfer in of cash, that can be super fast too. It's like you could be having a bundle investment by the end of today, no problem.
Yeah, and we have faster payment options as well, like payment with card, etc.
Okay, and bank transfers, what's your turnaround time if should a client need to liquidate and get funds out urgently? What kind of turnaround times do you look at?
So in terms of liquidation, you can sell almost immediately. It'll be done in seconds. Those funds will be in your own wallet, and you have an option there at the point of transferring out as to whether you want to do immediate settlement. That's through the RTGS system. So that's done within, I don't know, 10 minutes or so, or sometimes even less. Or you can go through the normal banking system with two business day wait. But generally, even if you do that, it's done within the same day, or can be done within the same day.
Okay, great stuff. And then I was just thinking now while you're talking, for first-time investors, a lot of these platforms, I find you end up talking to robots. And sometimes the robot's not programmed 100% correctly to answer your question. In case that happens, who can clients liaise with at Luno? Is there like an account manager that can reach out and help clients? Can they log a query? Will somebody get back to them? Is there a way to get past these robots?
Perhaps I could hand that one over to Taris or Christo. I think they're more informed on those logistics.
Sorry, I was just thinking about that now.
No, sure, I'll take that one. So reaching out to Luno is very easy. We've got a fully equipped customer services team that would feed back to customer queries. There is an element of bots involved as well, where the most common queries are automated at a response. Or have an automated response. But then from a Luno point of view, I think we fully accept our role in the industry to educate consumers as well, like you mentioned, Aniki, for first-time consumers. And that's why we have a very extensive educational portal on our website called Discover at Luno, where we have all kinds of FAQs, common questions, queries, and concerns that potential investors have. And we try to address that also to give insight into the broader crypto market, so that potential investors can understand, the industry a lot better as well. In terms of account management, that's not something that we offer at the moment. And we really want to empower potential investors and customers to really do the research themselves and just do a lot of the reading, to have a better idea of what it is to invest in crypto. And with an easy to use platform such as Luno, we try to make it as easy as possible for them to go on that journey.
Okay, great. Thank you, Krista. So let's then move on to you, Krista. Can you please tell us how safe our investments are at Luno? After what happened to FTX and the reputational damage, please elaborate a little bit on that. I know Taris did touch on that, but if you can give us a little more detail, please.
No, for sure. I think safety and the safety of your investment, of your money is one of our utmost concerns and priorities as well. And especially with the industry crisis that we faced last year, of the collapse of FTX and some of the broader and wider contagion that accompanied that, we at Luno are very set on making sure that our customer funds are secure and that their investments are secure as well. If we look at FTX, I think there's a much broader story to tell there in reason why they collapsed, right? And to then kind of blanket that as the crypto industry as a whole is not really a fair indication, right? So from an FTX point of view, it was a complete failure of corporate governance. They did not have proper risk management protocols in place. There was opportunity for large-scale fraud that happened. They also commingled customer and corporate funds, which is a massive red flag, which should not happen. They also created their own token, and it was this token that they created that caused them to be so over-leveraged, and also, kind of led or paved the way for the broader collapse. At Luno, we are, really a solid and secure platform where corporate and customer funds are not commingled. Like Tyrus also mentioned, we have one-to-one custody or one-to-one reserves of all of our customers' crypto assets. So that what we see on the platform is safely secured and stored away. And I think these are important factors to consider when considering to start trading in crypto.
Mr. Maputoma, class how I want to get the student that's a guy like 35, lady 80, 5 to the 8.
I'm just going to mute this person.
Somebody is not muted, yeah.
Just hold, let me see if I can mute.
At the event, I don't know if that was,
Okay.
Anyway, we were crossed line there. Sorry about that. Please
No
continue.
worries.
Sorry for the interruption.
So yeah, I think when considering a crypto exchange and a crypto platform to start, going into crypto investments, these are very important considerations to have. So make sure that the platform and the company is solidly run, and also that there's no commingling of funds, that there's proper corporate governance measures in place as well. And I think that also kind of takes us to regulation and the importance that regulation is now starting to play in the crypto industry.
So what are the pros of the regulations, the upcoming regulations? Tell us more about what is happening in that space. I know there's a window period that kicks off tomorrow on the 1st of June. If you can shed some light on that, tell us how that affects you. What do you have to get in place to be compliant? What are the benefits for the cryptocurrency market? And will that help us to get rid of all these scamsters and fraudsters? Because that's basically what we have seen in this space.
No, absolutely. I think when it comes to the crypto space, there's been a lot of discussion around the place for regulation and whether or not the crypto industry should be regulated at all. However, I think there needs to be a distinction made between cryptocurrencies and crypto asset service providers such as Luno. Cryptocurrencies are very difficult to regulate and can't necessarily be regulated because they are decentralized. But for players such as ourselves, such as Luno and other crypto asset service providers to be regulated. If we then bring that closer to home in a South African context, there's been a lot of progress made in terms of regulation in a very short amount of time. Last year, October, the FSCA declared crypto a financial product. And then in December last year as well, the FIC also declared, crypto asset service providers as accountable institutions. And that paved the way for crypto asset service providers to apply for their financial services provider licenses, which you mentioned opens up actually tomorrow. So it's a very timely discussion. And I know at Luno, our teams, have been working very, very hard to get that license application ready so that we can submit. What that then means for consumers, because if we look at regulation as a whole, that's the intention behind it, is to protect investors, right? So regulation needs to be timely. There's millions of people around the world that use crypto, and regulation needs to be put in place to protect those, right? It's also to keep institutions such as Luno accountable for fair practice, right? So that we absolutely apply all the regulatory requirements for financial service providers to have that in place so that we can provide, a service that meets the requirements.
Yeah, I think it's great because, when I personally started investing in cryptos, I always felt uncomfortable and I wondered, sure, will I get my money back? I wasn't worried about the cryptocurrency. I was worried about the provider and the platform that I use. And I think with these regulations kicking in, a lot of people will feel far more comfortable, especially in the derivative space, because the providers of cryptocurrencies, but specifically derivatives on cryptocurrencies, they will also have to do what the equity brokers had to do and apply for ODP license, where they're regulated by the Financial Markets Act. So I think there's a lot of additional layers of protection that's built in for investors, which is also good for your industry, because I think demand will also be increasing on the back of that because people will feel more comfortable with
Absolutely.
investing on your platform.
I think crypto as a whole is more on the riskier side of compared to other assets and other asset classes. But this is a movement that we are seeing globally, right? So it's not just not just locally. There's a lot of positive movements in the regulatory front. I think if we look at some governments and jurisdictions, especially the US, who are taking a much stricter and more risk-averse approach when it comes to crypto and crypto regulation, that actually is a negative for the industry. And it's also negative in terms of the development of that industry in the particular market. So in that sense, I think when we look at it from a South African point of view, it's a very positive movement for us, so that the regulators are embracing crypto, they're embracing the crypto industry and creating a space where we can have these conversations and actually do it in an environment that is safe, and then looks obviously to benefit the investors. So, it's still evolving. The crypto space is evolving at a rapid pace, but with these changes and movements in the regulatory front, at Luno, we tend to be very supportive of that and make sure that we contribute as well in terms of giving our opinion on how we think the regulation should be applied.
Yeah, I agree with you 100%. And the regulators in South Africa actually have a very, very good reputation globally. With even from 2008, the Bank Supervision Department at the Reserve Bank did such a splendid job in managing the risk. And even with the current interest rate cycle, our governor at the Reserve Bank was ahead of the curve, and he started increasing rates well in time. So from a regulatory point of view, I agree with you. I'm very glad that they're embracing it and trying to protect investors, and it's also good for your industry. So my favorite part is always when you tell people about the celebration of the Bitcoin Pizza Day, and I think it was celebrated on the 22nd of May. So please just share that story with us again.
So I think that's, when we look back in 2010, just to give a little bit of history to our listeners or our viewers, in 2010, a developer actually purchased 2 Papa John pizzas for 10,000 Bitcoin. At that time, the market value for 10,000 Bitcoin was around $42. If we translate that into today's value, it would be, around about $280 million. So I think that really captures very well that, Bitcoin is a store of value, and it just indicates the potential that the cryptocurrency or the crypto industry has. There's a lot of arguments to be made. Will there be another Bitcoin Pizza Day event or won't there? I think the jury is still out on that. But what it does signify is the immense growth that the industry has shown over the last decade or so, and that crypto and Bitcoin is not just a fad. It's an investment class, and it's an industry that is going to become commonplace, and it's going to ultimately shape and change the financial industry as a whole. So it's a fun little story to tell, but I think it's indicative of the positive gains that we've made over the past few years.
Yeah, thank you for that. And then my last question to you. I want to ask you, what is the view of Luno in terms of the cryptocurrency as a method of payment? And the reason why I'm asking this question is because it's out there in the public space that transaction costs for using Bitcoin as a method of payment has increased quite significantly lately, but also there's been a significant increase in the number of transactions on the blockchain. So what is your view in terms of the future for Bitcoin as method of payment, or cryptocurrencies, not only Bitcoin?
Yeah, I think to give that question justice, we have to take a broader look at it and not just focus on Bitcoin, because the various cryptocurrencies that exist have different functions and utilities, and I think Bitcoin has proven itself as a great store of value, and as a real good potential asset class in that sense. However, when we look at other cryptocurrencies, the utility of payment is definitely an option. But before we get to that point, obviously we need to speak to the transaction costs, which you referred to on the blockchain. We also have to look at the speed of those transactions at which they take place. So many of the proof of stake blockchains, such as Ethereum, have much faster transaction rates, which perhaps makes them a little bit more suited for as a payment method. But I think also we need to look at much larger scale adoption before we get to that point. So for cryptocurrency to be accepted as a broad method of payment, we need to have mass market adoption, which at this stage we're not. We're still in the infancy of the cryptocurrency space. But it does have a lot of potential in that sense. And I mean, just to address your earlier point around the transactions fees on the Bitcoin blockchain being very high, especially in the last few weeks where we saw a significant increase on those transaction fees. The Bitcoin Lightning Network was developed as a layer on top of the Bitcoin blockchain to facilitate these payments. A few months ago, we saw on the news that Pick n Pay, as one of the retailers in South Africa that would be accepting these payments. So there are positive movements being made in this space. Whether or not this is going to full on mass market at large scale, I don't see that happening in the immediate where the industry is going.
Yeah, and don't you think then that the introduction of the regulations will also boost the demand for crypto as a method of payment, an accepted method of payment? I think it might just boost the demand for it.
I think we just need to look at how crypto is then regulated in South Africa. The regulation at this stage does not allow for crypto, to be used as a currency in that sense and as a payment method as such. So then the regulation will also need to evolve to cater for that so that can be facilitated.
All righty. Thank you, Krista, for that valuable input. So, Rulin, last but not the least, can you shed a little bit of light on our favorite subject, which is income tax? And I would just like to know from you whether crypto investors can actually hide from the receiver of revenue because they are investing in an asset class that maybe they think the receiver of revenue is not so familiar just yet. I know, for instance, that crypto arbitrage is a very popular way of generating trading income for a lot of traders out there. And just for the audience that do not know what arbitrage is, it's when you purchase the same asset in one market and sell it in another market to profit from the difference in price. So what people typically do in South Africa is they export their fiat currency to an overseas exchange, buy the crypto asset on that side. Once the arbitrage gap is profitable, after you've taken into account your costs and volatility of the not share prices, the crypto prices, you bring it back via the blockchain, you bank your profit in South Africa, and you keep looping the funds until you have used up your discretionary allowance. And then you can add to it in terms of your FIA, but I believe that's not so simple to just go up to the 11 million rand per annum limit. But yeah, people can make very handsome profits on crypto arbitrage if they know what they're doing. So let me also use this opportunity to say that there are professional institutions out there that do this on behalf of people. But how will those profits be taxed, Rudine? And can you hide from the receiver? And all these new regulations, do they put an obligation on the crypto exchange to supply SARS with information regarding your transactions in crypto? And then the last thing that you must please tell us is whether there's a difference in the treatment of tax on normal traditional investments and crypto investments, and what tips do you have for people? Thanks, over to you.
On tips, I don't know that much, but what I can tell you is that South Africans we know are South African residents are taxed on their worldwide income. So whether you make an investment on a local cryptocurrency platform such as Luno or an international platform, you still have an obligation to declare this to SARS. So we've seen now that income tax returns now specifically provide for revenue from and the investments in cryptocurrencies to be disclosed on the return. The questions on the tax returns also makes it easier to comply with the requirements of the Act. At present, there's no obligation on crypto provider platforms such as Luno to issue tax certificates similar to those that SARS requires on traditional financial services providers such as banks and investment companies. However, SARS has significant powers granted to them by the Income Tax Act and the Tax Administration Act to request specific information from third-party service providers. So due to the changes in legislation and the imminent registration of platforms such as Luno as financial services providers, I'm of the opinion that we can expect a ruling from SARS in the not too distant future, where these platforms may need to provide such information to SARS. Then in terms of the taxation of cryptocurrencies or the profits made then, the tax calculation and principles are very similar to that of traditional investments. We do not have totally clear guidance as yet on the taxation of these profits, so we will still revert back to the general principles which is relevant on the tax relating to any investment income. And the question there is whether these profits are considered capital or revenue in nature. So the most important factor to consider is what the intention is when we do make an investment. The previous speakers also indicated that the spread of people investing longer term versus those investing shorter term, you clearly have a different type of intention when going into an investment. Saying that, it doesn't mean that your intention can't change if an opportunity presents itself. However, there's a rule of thumb that apply that says that if you hold an investment for 3 years or longer, that you will be taxed as on that revenue as being capital in nature. So you can either then be considered a trader or an investor. If you're considered a trader, you'll pay income tax at your marginal income tax rate. If the same taxpayer is considered an investor, you'll pay tax at capital gains tax rates. Now, by way of an example, to put some figures to that, if we're looking at John Doe being younger than 65 years old, earning a salary of, say, 300,000 per annum, and he makes a crypto profit of 100,000 Rand in that year. If he was considered to be a trader, he will pay tax effectively at 17% on the total income. If that same taxpayer then is considered an investor, he'll only pay 12% effectively on the same income. So the reason for the difference in the tax payable is attributable to a 40,000 Rand annual exclusion that applies to capital gain, as well as the fact that the remaining capital gain is only included in taxable income at a rate of 40% for individuals. So most taxpayers would naturally want to argue that the revenue is capital in nature, but behold, your intention and your, say, the way that you're trading will determine whether you are taxed either capital or revenue. So when we talk about crypto arbitrage, that definitely meets the criteria as a trading activity for income tax purposes. Then if we look at other type of crypto investments, investments, we're talking about crypto mining, which is still very popular, even though it's alleged negative impact on the environment. If we look at staking rewards, getting paid in cryptos, airdrops of cryptos, and then NFTs, the non-fungible tokens, if you create these or sell these. And then you also have the other DeFi investment activities, where you have new coins or tokens that you earn via staking, liquidity mining, or yield farming. All of those types of activities seems to be regarded as revenue in nature, and therefore trading income tax at your full marginal rate. If we just stand still a bit on arbitrage again, we know, like you explained, the process, you have to and can use your non-discretionary allowance of R1 million as an individual that you can invest internationally. So you also have a further 10 million foreign investment allowance that you can utilize, but for that you require a tax clearance certificate. Now, there were recent developments in the process for applying for the FIA clearance certificate. It's become very stringent and onerous. So it's advisable that you engage a tax consultant to assist you with these applications.
Thank you, Rulene. That's a lot to process, but it seems like there's actually no difference between the tax on cryptos and other investments. And then from my side, just to conclude, I would strongly advise investors who are interested in crypto investments to stick with the regulated service providers, because it's not only in the crypto space, scamsters are all over. And the only way to get these people out of the market is to stick with people that are actually regulated. So from my side, I would like to thank each and every panelist present for your valuable input, and thank you to all the online participants. My apologies for some of the technical glitches. Unfortunately, that's out of our control when the internet goes down from time to time. I'm not sure if there are any questions online. Rulene, you are the designated person to quickly just see if there's any questions, and then I will ask one of the panelists to answer if there are any. Can you see?
We have no questions as yet, Aniki.
Fantastic. So this was a very valuable session. We provided the guys out there with all the information that we possibly could. So thank you so much. It was an absolute honor to host you guys as panelists, and I look forward to the next time that we can tell investors about the next pizza day that we have witnessed. Thank you, everyone. Bye.
Thank you. Bye-bye.
Thank you.
Bye.